What is going on, guys? Welcome back to yet again another Market in Focus. This week, on the 10th of November, we are going to be talking about the response to last week's historic thrust. Right now, we're looking at our intermarket analysis that we start off every Friday morning, checking out how the week responded, how the last 3 months have looked, and the last 6 months. This allows us to ground ourselves with reality and not opinion in terms of price action. Let's go ahead and start at the top here. Look at Bitcoin, up again, 6.33% into yet another yearly high. If you haven't been paying attention, crypto in general is making moves. Not only Bitcoin, but now Ethereum joining above $2,000. Altcoins are moving. It has completely decoupled from the previous positive correlation within the NASDAQ, the growth market, right? Generally, Bitcoin and the NASDAQ moved in the same direction. They have decoupled over the last few months, and now Bitcoin, Ethereum, and the rest of the crypto market is completely leaving the station without the rest of the growth stocks. Bitcoin up 6.3% and 25.8% over the last 3 months. Guys, if you're not looking at it, you need to start looking at it. Okay, going back to the cues here, we have had a muted response. Last week's historic thrust was met with a muted response this week. The cues and the S&P 500 both up around 1 to 2% on the week. But if you've been watching market action, it has not been very constructive. We expected a bigger follow through on last week's historic thrust that triggered most momentum traders to start getting long, trend traders to drop their hedges and start getting long. Breadth guys started looking at this as an opportunity to get long, but we really had a muted response this week. And I think that's important to understand that although last week was very, very good looking at the beginning of a potential reversal to the upside, we just haven't had the follow through yet that we expected. So it's very important to understand that. The Q's up right now, 1.82 on the weekend, SPX up 0.68. Guys, let's go ahead and look at yields really quick. Yields are continuing to fall, right? You can see the 10-year yield is down 0.17 and the 30-year yield is down at 1.34 on the week, but we are still elevated. And if you were following along the auction of yesterday's auction data, it actually caused yields and the dollar to spike intraday, and it caused an intraday sell-off in the market. So the market is still very skittish around these auctions. We don't really know where yields want to go in the intermediate term. In the short term, they are starting to fall. We'll see if that relationship continues because we know yields are coming down, bonds are starting to catch a bid, and that is generally bullish right now in the market because equities and bonds are positively correlated right now. All right, it's important to understand as well. Oil, check out oil. Once again, down a huge 8.15% on the week, a historic week in terms of capitulation on oil. Who would have thought that a war in the Middle East would be bearish for oil? But here we are, down 8.15%. We were expecting $100 a barrel, and we got slapped in the face. But guess what? That's good for inflation, right? And we're going to look at that in a second. Very good for inflation expectations. If oil is breaking down, oil is trading somewhere in the low 70s as of right now. And last but not least, look at IWM, down 1.55%. Right, that is a character change from the Qs and SPY. So the Qs are up nearly 2%, SPY's up almost, 0.75%. We'll round up. Look at IWM, down 1.55. Small caps have failed to break and hold above a very key level. We're going to look at that in 1 second as well. This is your intermarket analysis. It's a mixed bag. That's it. It's a mixed bag. Other than crypto, everything is chopping and churning. Crypto is really the big winner here. So I don't know if you've been on Twitter lately. It's really not a fun place to be right now with the conflict in the Middle East. And I just, it doesn't matter how many accounts I mute and I unfollow and I whatever. I'm inundated with gore porn and doomsday preppers, and I just can't deal with it. So I'm not really on, at least I'm not scrolling through Twitter too much right now. But once again, I wasn't actually going to put this in, but Ryan Dietrich just retweeted this and it brought it back up to the top of my feed. And let's go ahead and talk about it. We're talking about oil coming down with the expectation of inflation also coming down. Check this out. Ryan Dietrich, you are the star for this week's Markets in Focus. He's looking at the relationship between inflation and the likelihood of another increase by the Fed. Right. He's making the argument here that rent prices are negative year over year in terms of apartment listings, and used cars have been negative year over year for the last 14 months. And he is postulating that Powell is done, that the rate hiking cycle is over, and that we should be looking for the higher for longer and potentially start pricing in the beginnings of rate cuts. Now, whether or not you want to argue that that's bearish or bullish, I'm not here to argue that. I'm just saying that it does look like the data is starting to show that we are done hiking, right? We can see that prices are coming down on a quarterly basis and a yearly basis now. Ryan Dietrich posting both of these for us to be able to make our own assumptions based off of the data and not opinions. This is data, not opinions. So once again, Ryan, I think you're onto something here. I think we have stopped the rate hike cycle. I tend to agree with that, especially with oil coming down with the veracity that it is. Okay, so let's go ahead and actually look at trading view here, right? Let's go ahead and pull it up. And there's a couple things that I want to look at. First things first, let's just start off. If you haven't, by the way, I hosted a webinar last night. It's free. It's on this YouTube on the Wyckoff market model and stage analysis. This is part of it. Go check it out. It's 50 minutes. I talked through the Wyckoff market model, Stan Weinstein stage analysis. It will help you guys absolutely, specifically for the swing traders and position traders out there, be able to understand key areas of the market to be buying right now. Okay, find those accumulation into markup period or stage 1 into stage 2 breakouts. Go find those. Okay, I'm not going to push it anymore, but it's free. I'll link it in the description below. Let's talk about Bitcoin. We talked about yearly highs. It's up huge on the week. We're continuing to push. Every day that this is above 30K is another day in the basket that this is probably the beginning of a new primary super cycle uptrend in Bitcoin. I mean, that's it. Whether or not you want to admit that it's because of the ETF or it doesn't matter. I don't care. Do you care? All I care about is that you should be long above 30K on Bitcoin if you like to trade uptrends. This is an uptrend. This is a primary structure uptrend that bottomed at the beginning of the year, hitting a series of higher highs. And here we are once again. 200-day moving average is acting as kind of the trend negotiator, if you will, telling us that as long as it's sloped up and price is above it, that price is probably going to continue to go up over it. That's how these uptrends work, right? So Bitcoin hitting yearly highs, absolutely running through the roof yesterday and then coming down slightly after that auction came out. But that's okay, right? We're up into that 37,000 area and we expect more. Ethereum breaking 2K. So it's not just Bitcoin, by the way, which is another reason why I don't think it's just this BTC ETF that everybody's talking about. Bitcoin is hitting upwards of 2-year highs here. I mean, you got to start looking at this stuff. These are the two megas in the group, right? These are the two that command the most market cap. We have to look at these and say if the two biggest names in the crypto space are breaking out, what is going to happen with the rest of the crypto space? If you own Bitcoin or Ethereum, or if you're trading it, fantastic. We've made videos in the past showing you how to trade these in the equities market. If you like that type of price action, if you like buying strong uptrends, you don't need to go and trade Bitcoin on a crypto exchange. You can simply go and buy equities that are positively correlated to Bitcoin's price action, Bitcoin miners, stuff like that. There's a video on this page. Go find it, or I'll link it in the description below. But yeah, we're breaking out. And let me show you one more chart really quick, just to really confirm this. This is the total crypto market cap with Bitcoin and Ethereum. I mean, come on. This is the total crypto market cap. And if we scroll out and you see the types of moves that this stuff makes, when we start basing and then break out of a base, look at the historic runs that the total crypto market cap is made. This is the beginning of a potential super cycle in crypto. And it's not just Bitcoin and Ethereum. We've had plenty of trades outside of the majors over the last week and a half, 2 weeks that have absolutely started to move. AAVE being one of them, taking it off the 90 pivot. At one point, we were up 20-something%. We had a pullback yesterday. We're still up about 7.8 to 8%, depending on the actual fill. We got Solana, right? This is the Sam Bankman-Fried FTX scam coin. Doesn't matter if it's breaking out of a base, we want to own it. Once again, this was a point of contention during yesterday's webinar. And then we have TAOUSDT, if I'm not mistaken. There's another one. Once again, used it yesterday, but we're seeing these breakouts across the board, and these are not minor breakouts, by the way. If you look at this, that's a 55% move spot. Anyway, if I'm not pushing this enough at you, you should be going and looking at the stuff. Once again, if you don't want to trade it, that's fine. You can find stuff in the equities market to help. Let's talk the dollar, King Dollar, most important chart all year. Has been for the last 2 years. Above 105.5, stocks tend to have a harder time going up. Below 105.5, it looks like stocks tend to have an easier time going up. We are this week drifting back up and into that 105.5 area. So yesterday, it looked like we were actually going to break back down below. And then we got the auction data. The dollar spiked. And here we are opening up on Friday right above 105.5. So once again, it's going to be harder for stocks to catch a bid if the dollar is above 105.5 and continuing this primary uptrend that it's been in for the last few years, right? Last few years, this is a primary uptrend. We had a consolidation and potentially a new breakout. But below 105.5, it's going to be easier for stocks to catch a bid. And unfortunately, this week, we've had a rising dollar. It has not blown everything up. It hasn't absolutely destroyed the market as it's popped up. It's been slow and controlled, but still that has muted some of the response. We saw it with the Qs, saw it with SPX, right? SPX being up 0.66, Qs up only like 1.5%. Partially is because the dollar is starting to catch a bid. Everybody that wants to buy the dollar is not buying stocks. That makes sense, right? So let's look at this. SPY, nice moves last week. We see the historic gap and goes, right? That's where we saw the crazy price action. But over the last few sessions, we've started to slow down a little bit, right? Momentum is slowed. Yesterday, we got the big pullback. Is that to shake people out? I'm not entirely sure. I'm not going to sit here and tell you that I know the exact reason. I do know that we were prepping for an above 437 close, being more bullish than bearish, and boy, we got it. That's why we are still cautiously optimistic. We have finally hit a series on an absolute basis of higher highs going all the way back to that July peak. From a technical standpoint, this is potentially the beginning of a new uptrend. We got to see if this is going to confirm. We're already starting to getting long. So if we get pop back down, that's fine. We'll take our losses, the small losses, I have to say. But we want to start positioning ourselves long because it looks like this is going to be the beginning of a new leg up. The Qs, same thing. As a matter of fact, the Qs look even better, right? We were looking at the 370, 371 area. We closed at 373, green lit it. Market pulled back yesterday. We'll see what happens today. It's going to be a low volume day, by the way, because it's Veterans Day. Bond market's closed. Equity market tends to be super low volume. When the bond market's closed, everybody just leaves, right? That's how this stuff works. We're going to see how the Qs look at the end of the session today, but we have to take this as it is, right? Things are looking better than worse right now, even with yesterday's pullback. As long as we're still clearing this 370, 371 area, I still think there's an opportunity for us to continue the bounce. So once again, cautiously optimistic. The one area of the market that I'm not cautiously optimistic is IWM. This was terrible. I was really hoping that we were going to stick 174, 175, maybe base, and then pop back up towards the 200-day moving average. We don't need small caps to be leading the market in any sort of capacity, but we need them to at least be playing ball. Can we please get them at least moving sideways? Every day that these are moving down is another opportunity for the market to just sell everything. This is a risk sentiment that we're looking at here. Look at this. This is a risk sentiment. Every time IWM is down here, the market is frail. And now we have a previous support level potentially being tested as what? A resistance area. We come down, we flip it into 3-year lows, we come up and test it. It would have been great to flip it and come back up, but we didn't. We have to be truthful about this. Is this a support flip or a resistance into a support flip? No, this looks more like a resistance retest into a potential new leg down. So this is the one kink in the armor for that higher high idea for SPY and Qs. The IWM does not need to be hitting new highs for the market to come up. By market cap, we know that small caps are not going to influence the S&P 500 or the Qs in any meaningful way. But from a risk sentiment, right? From understanding that if market participants expect the market to go up, they should be buying the riskier stuff because this is where typically you're going to get the outlandish reward. So at the very minimum, we want IWM back within the range, right? Market was hitting new highs when IWM was just going sideways. Can we start going sideways again, right? So we're going to go through about 2 stocks we opened up, right? 2 stocks we opened up this week, but we're going to go through about 5 overall, right? We went through these last week. We're going to go through them again really quickly. Meta, this is the stock to own in the mega cap space in the communication sector. Only stock that did not draw down and break new levels when the market was pulling backwards. It was just going sideways. We expect Meta to break above 325, attack 360, and potentially into all-time highs. We are already positioned in Meta for that scenario. Microsoft, if you followed the content last week, we got in down here in the 340 area. This has ripped since we got in. This has been a very good trade for us. We are at absolute all-time highs in terms of closing. In terms of intraday price action, we're about $1 away. So I fully expect Microsoft within the next week or two to hit all-time highs on an absolute basis, not only a close, but intraday, and we're positioned for it, right? So we're looking for a 380, a 400, and then up here in the stratosphere, a potential 435 test eventually. No idea how long that's going to take, but eventually. We're also long CrowdStrike, right? We got long CrowdStrike at the beginning of October, and there was another opportunity here if you weren't able to grab it off of a BRB. Good stock, year-to-date leader in the cybersecurity space. No reason to expect this to not continue to go up. This has been working very well for us. This week, we opened up 2 new stocks. We opened up Amazon, or we started to open up Amazon on the pullback yesterday. We had a game plan to get long one consumer discretionary mega cap. Amazon, Tesla, stuff like that. We decided no Tesla like 2 weeks ago, which was the right call. Tesla was down like 6% yesterday. Amazon pulled back into the 140 area. Nice big round number. We said, let's go ahead and risk that. Let's risk the 140, and we're looking for a 160 to 165 price target somewhere up here. We grabbed Marches, so we have plenty of time for this. Looking for the year-end rally. Amazon probably going to catch a part of that. As a matter of fact, there's some clues here because it's bounced so heavily off of the 200-day moving average on ER, right? It's up 15, 16%. Most other mega cap names did not have the same reaction, so for whatever reason, we understand the market wants to own Amazon, and so do we. Now that we have that 140 level for risk, we were able to get filled. We feel comfortable with that. Last trade, and the one that went out in public, was the Uber trade. We like this trade as well. We were looking for a pullback here in Uber, right? We wanted to get long around 48. We were unable to get there. Instead, we took it in between 49 and 50. So we are now long Uber. We're targeting the $60 calls in March. We feel like this is a good level. There's lots of open interest and volume. And then above 60, there's that all-time high breakout. This is just a consistent winner all year. It's up over 100% year to date. We consolidated. We came down slightly. We tested the 200-day moving average, bounced on high expectations for ER. That's a power earnings gap. That's the catalyst that you want to see propel a stock to new highs. And so we're expecting Uber to get to new highs. Once again, 60, those Marches, we got filled on them yesterday. Guys, we're cautiously optimistic. There's some good stuff going on in the markets. There's some bad stuff going on in the markets. But what the hell? What has changed since the last week? Realistically, nothing. Some individual mega cap stocks went up. Crypto went up a lot. But for most things, they just went sideways or slight down. And I think that pretty much sums the market. Things are churning over right now. Nobody really knows. The bears are very boisterous right now. The bulls are screaming that there's all-time highs coming within the next year. Who knows what's going to happen? We're focused on price, and that's why we trade the strongest names in the strongest sectors all the time. Don't care about opinions. My name is Hamilton. I'm here at the Trading Initiative. I will leave the links in the description below for both the Wyckoff market model and that Bitcoin video. Watch both if you have time this week. It's good content. If you like this type of content, like and subscribe. Please leave a comment below. I will respond to you, and I'll catch you in the next video.